Welcome to Ty's Daily Market Briefing. I'm Ty Wong, reporting from New York, and it is Tuesday, August 18th. So what does the president have for us today? Well, this is an interesting one. He posted this morning, there are no talks or conversations going on or scheduled with the Islamic Republic of Iran. The naval blockade remains in full force and effect. The Hormuz Strait is open and operating. All water mines have been removed or detonated. Thank you for your attention to this matter. Well, all mines detonated would be a good sign. I'm not actually sure that is true. But even if that were true, and that might be potentially true, and certainly we may have been working on it, but there's still the matter of missiles and drones. And I think there is shuttling of oil using smaller boats into the big tankers outside the Gulf has been happening, will continue to do so, but it seems unlikely that full tanker traffic or anything close to it will happen anytime soon, unless we get another announcement. And then I just wanted to follow up on the story yesterday where Trump was angry at South Korea and reduced the scope of the military exercises. The Wall Street Journal had reported on what Trump said. He says, "Would you like to give us a little hand?" Trump said, recounting a conversation he had with South President Korean Lee Jae-myung before stressing the U.S. didn't need any help. He said, "No thanks," Trump added. And I said, wait a minute. We have 39,000 soldiers over there guarding you from Kim Jong-un, your next door neighbor, and you're not going to help us on a very easy military operation in Iran? That's strange. I mean, it's not easy. I can understand why South Korea doesn't really want to get involved. That would make an enemy of Iran. They don't probably want that. And they figure it's, really something that not really our problem, but it certainly made Trump angry. I don't think he's truly in love with Kim Jong-un, but this is if you're not nice to me, I'm not going to be nice to you. It's how Trump thinks, very transactional. It is, I think, unfortunate, but that is who he is. So the smartest thing, and I haven't seen any headlines, is don't poke the bear. Key stories for today. I'm going to start with global bond slump sends long-term borrowing costs the highest in decades. And that's really something that's been dominating the conversation, I think, over the past couple of weeks, and increasing in terms of intensity. The Telegraph reports that U.S. oil reserves fall to the lowest level since 1982. We talked about Warren Buffett and Berkshire a little bit yesterday, while Barron's has a good article today saying Warren Buffett is still making big bets at Berkshire. And finally, the Wall Street Journal in the exclusive reports that Costco is selling vacations, gas, and soon Medicare plans. Okay, this is the story that's really sort of in the air, really dominating a conversation right now. Global bond slump sends long-term borrowing costs to highest in decades. Longer maturity bonds are at the epicenter of investor angst, nervousness, about everything from inflation to the debt-laden AI boom, and governments are paying the price. Bloomberg saying yields on 30-year U.S. treasuries rose to the highest since 2007 this week. French borrowing costs hit the highest since 2008. German costs up at 2011 levels. The British gilts are nearly 6%, pretty difficult for them because they can't borrow like we can. And Japanese ones are close to their all-time high. While domestic factors have a role in each market, the structural forces driving up yields are global in nature. So the whole market is nervous about longer-term bonds, and I would say longer-term bonds is anything beyond 10 years, 10 to 30 years. Bondholders are worried about governments failing to rein in spending. We spend too much. That is known. We will probably continue to do so until the day that we can. Good point is, meanwhile, changes in market structure and demographics are resulting in waning demand from once steady buyers. The market is saying we expect greater inflation or at least greater uncertainty in the future, and therefore we demand a higher yield for longer-term bonds. And as a result, because bond yields are so high in the back end, countries are borrowing more in shorter term. I think we're borrowing in bills, which is 2 years and less, or 2 to 5 year notes of that nature. I think our weighted average is somewhere around 6 or 7 years. The only thing that might change it is sudden weakening economic data or some kind of external shock. This is bringing all the nervousness in the market right now. Higher energy for long term because Hormuz is not going to be settled. High government debt everywhere. The Europeans are spending to shore up defense against the Russians. The U.S. is spending because we like to spend. We have a lot of obligations. And then a new question is, AI's been borrowing a lot of money. The hyperscalers, longer duration, off balance sheet stuff. Can AI survive with rates that are 6, 7, 8, 9%, where they've been used to something like 5 or 6? That's a question. And I'm not sure that's the right question right now, but the market loves to get nervous about things. And this nervousness is showing up in global bond yields going up higher in the back end. Okay, Telegraph reports that the U.S. oil reserves, the SPR, the Strategic Petroleum Reserve, falls to the lowest level since 1982. And fresh concern that oil prices could surge as the Iran war drags on. So everything's sort of linked. The SPR is now at 293 million barrels. This is lowest since 1982. The International Energy Agency reported last week that global oil supplies at 102 million barrels a day is still 6 million barrels less than a month ago. So you're really looking at a drop of 6%, not 20%, because demand is, well, actually, this is just supply. Supply is up from places outside of the Gulf. The Saudis are managing to ship things out. So you're using 6 million barrels a day, which hurts, but is survivable. So it's really the market driving it rather than really supply and demand. Demand has dropped, but only by 1.6 million barrels a day on average. Most of that is China. Worldwide oil inventory shrank 69 million barrels in July. So that's the buffer. The buffer is shrinking, but we're still getting out 102 million barrels a day in July. Not actually that terrible. Now, global oil stockpiles have dropped by 410 million barrels since the U.S. and Israel attacked at the end of February. That's a little bit more of a concern. Back to the SPR, we had a 415 million barrels before the war. Trump ordered a phased release of 172 million barrels, which will, at the end, shrink the SPR to 243 million. In terms of how much we can draw down, we can't really draw down too much more, much under 100. I don't think we're going to get there. And what's interesting is actually the U.S. aren't really selling barrels right now. They're swapping it. So essentially they're selling and buying at pretty good prices in a backwardation. So they're selling today, and then whoever buys them today has to return those barrels plus another 10 or 12% sometime within 6 months to a year. So this is going to get refilled, but not for some time. But this is the government actually making some pretty good money in it, saying, we will sell you X barrels. Now, we'll give you X barrels now. You have to return, 1.1 times those barrels sometime within a year or so. It is drawing down slowly. Not yet an emergency. Okay. This really interesting because I love Costco. Costco does a great job in terms of buying products, selling at a good value, very, very solid. Remember, half of their revenue is groceries, and people are not going to stop buying groceries. So Costco sells travel packages of gasoline. We use Costco Vacations. Costco gasoline is busy everywhere they sell it. It is not in New York. But now they're going to sell Medicare Advantage plans. Those are the plans that, in addition to Medicare, help pay for the other 20% that Medicare doesn't cover, or other things that Medicare doesn't cover. And it's a really important business because we have a lot of retired people who are growing in percentage and numbers as the years go on for probably the next 20 years. So they're working with this company called Scan, a nonprofit insurer. They have 3 target markets that include about 5 million Medicare enrollees. Southern California is the core market, Arizona, Nevada, New Mexico, Texas, and Washington State. So Medicare Advantage will integrate closely with Costco's offerings across prescription drugs, vision, over-the-counter medications, food, and hearing products. So becomes a shop, do everything here at Costco. And now, the new Medicare products won't come with a Costco membership thrown in. The federal government doesn't allow that. But being able to sell things in Costco it could be a real game changer because people trust Costco. Costco members know that if they buy something from Costco, it's been vetted and it's the best thing in the category. So they're looking to sell in Costco, as well as insurance agents and websites. But this could be a game changer. We'll have to see how this worked out. Let's take a look at Costco. The last 18, 19 months, the stock has really been in an 880, 1050 range. You can actually try to scalp 10% out of it. If you buy up around 900, if you buy down around 900, sell when it gets to around 1,000. You've been able to do that. Not many times, but certainly there's been value there. It's at 970 right now, so not much to do here. You could sell short if we get well above 1,000. I prefer to buy it and then sell it, but you can also sell short and look to buy lower. Now, their forward PE is 43.5, which is for a retailer essentially very, very high, but their moat is also very, very wide. People are not going to stop going to Costco, particularly since 50% plus is grocery. So very interesting move by Costco here. Okay, so yesterday we talked about how David Tepper has appears to have a $12.5 million bet against Berkshire, believed to be an option. So there was a good article on Barron's about what Warren Buffett is doing. So I thought we should show the other side. So Berkshire Hathaway's portfolio in the second quarter highlighted a couple of trends. Buffett, who's going to be 96, remains chairman and still makes a lot of big investment decisions, and he's letting the investors know that he's still involved. He was behind Berkshire's move to buy Alphabet stock at the in the second quarter, a stake that's worth $36 billion, increasing from 83% in the second quarter. It's Berkshire's third largest investment behind Apple and American Express, and just ahead of Coca-Cola. Berkshire doesn't usually point out which manager bought it, but in this case, Buffett actually said it himself. I initiated. I normally wouldn't give you an answer on something like that, but I will, because I'm not doing anything that he doesn't approve of. That's Greg Abel, who's the CEO. He's not doing anything that I don't approve of. So basically, Abel is the CEO, but there's obviously a lot of deference to Warren as long as Warren is still around and has control of his faculties. Buffett loves buying and selling stocks. It's his first love. So this says Warren is still at the table. Spending a second slide on this because it's interesting. Abel, meanwhile, seems to be letting Buffett and investment manager Wexler handle the equity portfolios. Now, they did get rid of another portfolio manager left who had 5% of the equity portfolio for about 15 years. He held Visa, MasterCard, Aon, Amazon. Actually, once he left, Berkshire sold it all. Not sure if that was Abel or that was Warren, that maybe they didn't like it anymore, and since he was gone, they just got rid of it, a clean slate. Now, Greg Abel has no formal portfolio management experience and doesn't appear to be making any stock picking decisions. He's busier running the $1.1 trillion market value conglomerate Berkshire with dozens of divisions and some underperforming units. So the question is, how much longer will Buffett be able to make these investment calls? He's slowing down. He can't read well anymore because his eyesight's going bad, and you can't look at the 10Ks and the 10Qs that he used to love to. So the point Barron's makes is this could mean that equity investments, which generate the bulk of Berkshire's growth for 30 years, from 1965 to 1995, may no longer be the biggest focus going forward, as Abel focuses on operations and buying entire businesses. So I think Warren will be trading as long as he's still able to, but something to think about. And here's Berkshire. We looked at it yesterday. It was up. It is up a bit today, but the stock has been sideways. I don't have a huge opinion on it. Okay, looking at the Kospi, this is not a good candle. Only down 1.5%, but it failed at the 100-day moving average. Not a huge 8, 9, 10, 11% drop, but failure here looks like we're probably going to try the downside, especially what we see with the NASDAQ today. Okay, I've changed the Brent oil chart because the other one I think was getting a little bit harder to read. So let's do this. Instead of the horizontal lines, I put in vertical lines, and this is when the war started. This is the big part of the war. This is the ceasefire, this area. We have a memorandum of understanding that saw Brent go down to the low 70s. The war resumes after they attack ships in Hormuz, and now this is just a blockade. So it's drifting higher right now, not a small range. Gasoline and heating oil, gasoline up 1%. Diesel is unchanged, but diesel is near highs, and probably the more important one, though the one to the economy, though the one less obvious to voters. The gasoline prices today were unchanged from yesterday. Where are we? Well, stocks are down about 0.5%. The Nasdaq's down 1% right here. Crude is up small. Bonds actually up a little bit, but the concerns, as we mentioned, are still there. Equities are down. Metals, kind of disappointingly, are not really breaking higher. Maybe it's the higher real yields that are making people a little concerned. And crypto up small for the second straight day. So good sign for crypto. Nasdaq, nervous, down 1.5%, at least on this chart. So down between 1 and 1.5% right now, still above the 50-day. Let's see if we can hold above there. The S&P 500 is down 0.5%, all of it overnight. And you can see actually breadth is pretty good, 6 out of 11 higher. But technology led by semiconductors are getting hurt, which is dragging the whole index down. The calendar, long-term tick flows. Oh, I didn't update this, but long-term tick flows last night showed that in June, very strong foreign interest buying U.S. equities. Pretty soft demand for treasuries. I think that trend may continue. ADP this morning, 9.5 versus 8.25 last week. This is still a pretty low level. This means the 4-week trailing average is 9,500 a week. That comes down to 45,000 new private payrolls jobs a month. I think that's an indication that it's going to be slow. Depending on what the government does is how payrolls will look. Permits were up, but starts were down. BHP, mine's mostly copper, basically met revenue up a little bit. Home Depot beat on revenue, also up a little bit. And this has to do with a lot of homes and buildings. So that's why we keep an eye on it. Thank you for joining me today. We're going to keep an eye on the bond market, particularly if bonds, inflation, oil, and AI finance is going to dominate the conversation. I'll see you again tomorrow.